Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, February the 22nd, 2023. Was a wild and crazy day again today in the equity markets, and I have now been able to complete 5 waves down on the hourly chart. And as I have labeled it out here in the S&P, it appears to be 5 waves of minute degree to complete minor wave 1. So again, what that does for me is it puts confirmation in that the high that we got at 4186, which would have been on Valentine's Day on the 14th of February, did end in a failure, did produce the minor wave C, and completed the intermediate B wave rally that we had been in since the December lows. Now, coming off of that, we have minor 1, 2, and then a nice subdivided third wave down, and that would have been minute 3, minute 4, again coming in this morning on this morning's high, and then a quick drop back down, putting in a new low, hitting upon some very strong support at 39.85. And that completed what I'm counting as minute wave 5, and then in turn, the minor wave 1. Now, if you remember that since we are in an intermediate degree C wave down, what that will consist of is 5 waves of minor degree. So we've just completed that first wave down. Came in at a good level in terms of the support for the intermediate C wave, and it came at the first level, which would be 0.236, and that was at 39.94, I believe, 92. So it dipped just below, came back above, closed strong, which gave clearer indications that did put in a tradable low, let's say, and completed this first wave down. And now we are likely in the process of putting in a minor second wave ABC countertrend rally. So, and we're off to a good start. So now let me add, kind of pull this open a little bit so we can see those internals. So once again, everything seemed to fall into line to bring us down. Now, could we continue lower? We can. We can. It could be an extension so that the minute fifth wave down would be extending lower. And I'll put in some fibs so we would get some idea should that occur. Right now, though, I'm going to take that this is a tradable low in terms of that it was the completion point for minor wave 1, and now we're in a minor wave 2. So what does that entail? Well, I'm going to put up the retracements for a wave 2, start back there at that high, bring it down to this low. And so what we get is a fairly solid run, which, guess what, includes another run up towards 4,100. So if we just take a look at this and how it should unfold, that what we look for in a wave 2 on a Fibonacci basis is that it normally will come up to within 50% to 62% at 62% retracement, 50 to 62% retracement of that first wave. And that would bring us up to 40.85 to 41.10 or 41.09. Now, looking for it to come up in an A, a B, and a C. And again, the A wave, and it could be, and likely it's going to be a zigzag, which means 5, 3, 5. So wave A will be 5 waves, wave B will be 3, and wave C will again be 5 waves. That would be my first take at what this will look like as we begin to go up. So again, in the S&P, I'm counting that it's likely going to be a minor second wave. I know it's been speaking about fourth waves, but we happen to put that all in and still come down and complete the whole process again today. So completing the third yesterday morning, running around, putting in a new low, coming back up. The first low at 39.90 from this morning, running back up to 40.26 for that fourth wave, the minute fourth wave, and then swinging back down, putting in the fifth, or at least the beginning of the fifth. So we have to leave open that possibility again that this the minor first wave is not complete here. Now, let's just take a look at what could happen if that's the case. So what I'm now going to do is I'm going to take off these minor wave 2. So we're giving both sides of this coin, okay? If that low at 39.85 completed this first 5 waves down, which is being labeled as minor wave 1, then we'd be looking for a minor wave 2. Excuse me. If, though, that this was just the first wave of the minute wave 5, let's take a look at what that would look like. So first thing I'm going to do is I'm going to take that off. Now I'm going to put in extensions. So we're going to get both sides of this coin. So what we're going to look at, we're going to go to the top of wave 2, to the bottom of wave 3, to the top of wave 4. And now you see we have quite a bit. So even if, and again, this is just saying that this wave is going to extend, that today's low did not complete it, and we turn and continue to head lower. What that then suggests is that we have support to complete it, first off, at 39.22. So we have 39.61, 39.42, 39.22. That would be 618. Wave 5 would equal wave 3. Wave 5 would be 618 of wave 3 at 39.22. That's not an uncommon level. Then we have 39.07, and then where wave 5 would equal wave 3 is down here at 38.59. And that brings back into focus the 382 for the larger intermediate C wave. So all things can still fit into that larger picture. But I'm going to leave this right now, but we're going to have to leave open the potential that this fifth wave did not complete at the low today, and that we still have a total of, that this is 1, 2, 3, 4, 5. Then that would produce the extended fifth wave, and then again, that minor wave 1. So all things remain possible here. Now, I believe that this discount is going to hold in place. So again, I am going to come in and take this one off, and I'm going to tell you why. That we had NVIDIA put out their earnings, and the stock at first take jumped for $17, up for close to 207.54, currently trading at almost 225. It's been as high as 226, coming back off now as the stocks continue to trade just before our Globex opening. So I am expecting that the S&P is going to continue to go up. Now, what would seal the deal, so to speak, that the minor wave 1 is done, is if we come in and jump above 40.26. So if that I'm pretty clean that should be the 4. And I will show you on the close basis on the line chart how that was the 3, then we get the 4, and then it jumped back down, and now it shoots back up. So that all fits. And again, then over in the NASDAQ, it fits even cleaner. So being that NVIDIA is a part of the S&P, and some of the other stocks are already beginning to kind of creep back up on that basis, Tesla being one, and then we have Apple, also climbing back up, Amazon climbing back up, Google's very little, but we have Microsoft coming back up, so already up $1 over this. So that's going to bring this straight back into focus to really continue to push higher in a second wave. So again, I am now going to put back the fibs for a wave 2. And that again is going from that high to that low. And as you can see, what we have is initially 40.31, 40.61, and then we get them to 40.85 and 41.09. So just when you thought it was safe that 4,100 likely was not going to be reached again, it shows up in terms of the next counter trend rally. So that remains in the picture for right now. That's how I'm going to leave this. The moving averages are continuing right now just to kind of be more consistent with the close. We saw the 8 and the 4 start to turn right there. Let me see if I can open this up a little bit so we can actually see inside. So you can see the 4, the 8, they hooked on this pump up after NVIDIA's earnings. And then I would suspect that if we can continue to go up, they will also begin to turn. Being that it's only a minor degree wave, if we get up there, we will be crossing the 200. So I would be suspecting that first, this is going to go flat. It's going to provide some resistance. This one is likely going to go flat. Will provide some resistance, but it actually depends on how quickly they want to buy it back up. So we'll see. Against all of that, we continue to see in the interest rates that the market is holding right at a support level that it needs to hold, particularly in the 10-year note. But a break there will continue to push a picture that not only are rates going to go up, but that we might not get that second leg in terms of the counter trend move in the bond markets. So that's still out there. And that, again, may cut short any type of rally. And then we just turn and we head lower. So with that overhang on the market, up moves, and even on a minor second wave, may not get as far as you would think. But I basically would almost look for a rally back towards that 40.60 area. Minimally, 40.31 should definitely be and hit and cleared. And that would clear it on the 50, and that may give a boost to the whole thing. Over in the NASDAQ. NASDAQ, same story. Again, coming down, putting in a minor wave 1. And let me get that opened up a little bit. I'd like to look inside. So minute 1, 2, 3, 4, 5. Now that low and that low, you can see that one's higher low. But when I go over and I look at the closing basis, this was just an extreme. So it was a candle extreme push down and immediately flipped right up and out of it. This one gets put in place on a closed basis. That gets to be the winner for where I'm labeling minute 5 and then minor wave 1. So here as well, what are we looking for? Well, a minor wave 2. We go back up to the candle. So what I've got in place, again, this needs to be adjusted just a tad, because that would be against that level, and I need to put it up to 12,049. So it's a good 30 points higher, according to that. In there. And then we get a little bit of a difference, just a little bit of a difference. So what we'd be looking for in a wave 2, again, if it were to come up 618, we're looking at 12,450, we'll call it, 447, 450. Now, what we have coming up first, though, and I'm going to say that I think that we're going to get there pretty quickly. Now that we're getting ready to open up in the Globex session, we're going to open higher still based on their earnings. Stock now back above 225. So we have 12,201. And right there sits the 50 at 12,207. So we got that there. I would feel that the market should easily conquer that level again and get an A, a B, and a C. And I think it should be likely a zigzag. So we get 5 up in an A, 3 down in a B, 5 up in a C. That brings us up to minimal 12,000 I'm going to say 300. Let's just round it up, 12,300. So it's 295 to 300. Then we have the 200 EMA there at 12,372. And providing some resistance, if it hangs out there at 12,368, will be that 200. And that's the EMA. The SMA is at 417. And then that 618 at 12,447. So again, A wave up, B wave down, C wave up. And that's what I'd be looking for. And more than likely, it comes into that area of this fourth wave. That also becomes in play as an area of where this corrective wave will end up. It's not necessarily a 4, but I continue to consider that an area of resistance for any counter trend move. So again, these are works or counts in progress. So there may be changes because the other side of this coin is, for whatever reason, market decides to only go up a little bit more and come sliding back down, which is going to leave us in a position where this fifth wave is going to extend lower. Somehow it may not happen, but we'll see. It could. But right now I'm going to leave our labeling just as it is. And what you would do if indeed this fifth wave is going to extend out, we would then need to go to much different levels. We got to go back up to here, and we've got to bring it down. So we go, the fifth has to come back down from here to here to here, and then extending. But inside this wave, we do the same thing, right? What's the extended 5 going to look like? Extended more than it is? Don't think so, but it's possible. Then we're going to be looking at, and I'll just put that in just so that we can take a peek. I'm going to remove that one, and I'm going to go back over here and then put up these. Go from there to there to there. You can see 100%. We're just looking at 1989. 5 can come down and extend down here. So it looks like it's pretty well complete, but we still have to allow for a little bit additional, with that possibility of going to drift down below 1900 or 11,900, I should say. So it's 11,989. Right now, I'm saying it finished at 12,045. So below 12,000, sure. Actually, first up we have is 12,024. Not really looking for that to be a strong possibility on how they are looking to open this. But they're going to, looks like they're going to try to put it down a little bit. We shall see. We shall see. So again, all things are possible. We're going to keep our eye on what is going on here. So I'm going to go ahead and remove that. Again, put back my other. And we'll pick it up again tomorrow. There we go. So just a quick review again in these, the bond market. They are really just sitting straight on support. The 30 years are a little bit above support levels. It has drifted down below 124.11, which was important support. I think it has gotten down to 04 so far. Of importance is going to be the Fed funds rate, which did manage to close up slightly from it had been trading at between 95,330 and 95,335 all day. Then it drifted down to the bid dropped, and that pulled all of the other markets down. So I am continuing to watch this very closely in terms of what possibly is coming out in terms of interest rates. Remember, interest rates, they basically trump everything. So all eyes are on this. And we saw the markets turn strongly lower once these bonds started to give up and that Fed funds rate dropped. And that kind of brought them all down. All right, that's where I'm going to leave it for today. Now, tomorrow, in terms of numbers, we have the GDP and jobless claims. Both of them carry enough weight that could send the market tumbling again. And it's going to come because they're showing inflation is not under control, that the Fed is correct with at least a 50 basis point hike in March, if not more. And that would end this and swing us back lower again. So whatever we get overnight in terms of the rally may be all we get. So again, what I want to just include that even though I could be looking for these and we know what the normal fib levels will be as associated with the wave pattern that should be unfolding or may be unfolding, if anything comes in way below, it is just showing strong weakness in the market. But right now, you can see that we are opening up. We closed at 66. We just opened at 75. So about $9 higher, and now it's going to kind of come off from that level very quickly. But we'll see. I'll keep an eye on it. Our next update will be on Thursday, February the 23rd.